I can't help but be very optimistic about commodities. I can't help but be very optimistic about where I think gold is going to go. Because Scott Batson, the Treasury Secretary, his largest position right before taking this job was gold. Wasn't Bitcoin, wasn't oil, wasn't silver, was gold. That doesn't mean other commodities and other things shouldn't do well. All I'm saying is clearly there's a understanding of the history and the credibility and also the reputation of the metal of being able to act not only as a safe haven, but truly as an anchor to a falling monetary system like the US dollar and other fiat currencies. And so I think we're going to see prices of metals that are likely to surprise everyone.
Gold bull markets typically last 2 to 3 years on average. In the past 4 decades, when gold prices rallied more than 15% in a given year, they increased beyond 15% in the next calendar year on average. The annual log return for gold in 2024 was 24.1%. The simple return was 27.2%, and the real return was 21.4%. This historical analysis speaks to the nature of the typical gold investment cycle. Bullion price spikes are almost always a function of a shift in the gold aggregate demand curve. Macro strategist Tavi Costa of Crescat Capital mentions that the global race for precious metals, particularly gold, is just beginning. He states that the U.S. will soon enact significant gold-related policies. This, he argues, underscores gold's strategic role due to extreme leverage and instability. However, Costa underscores central banks' aggressive gold accumulation, signaling major monetary shifts. He highlights that Chinese buyers have been paying significantly above market prices to secure these resources, indicating a broader strategic move. The People's Bank of China accumulated 1,448 tons of gold between 2002 and 2019, and then reported nothing for more than 2 years before resuming reporting in the fall of 2022. Many speculate that the Chinese also continued to add gold to its holdings off the books during those silent years. While questioning crypto origin, Costa believes it merely distracts from gold's true importance. He thinks gold's price surge isn't just due to Western investors and hidden large-scale purchases. Bitcoin price needs a key rebound. As Cointelegraph reported, a popular theory suggests that Bitcoin lags gold by several months before ultimately copying its trajectory. Bitcoin copying gold's all-time highs is a matter of time as the precious metal outperforms Bitcoin and the US dollar. Now we present the clips of Tavi Costa's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I spoke more directly about silver because I've been involved with that. I've also been involved with zinc and lead that we've experienced similar transactions where, for instance, Chinese parties paying, significantly more than market prices to secure metals. But this is clearly happening in the gold space as well. Gold, it's almost funny to me to see this euphoria towards crypto. And it makes me wonder who created this whole space and who really initiated Bitcoin and all that, given the fact that we don't know who did it. Because it's almost like a perfect way to distract the Western societies from the bigger picture of really owning a hard asset like gold in order to protect its monetary system. And so there are a lot of big negotiations happening, that are under the table, or I should say off the radar, it's a better term, that I don't think people are necessarily fully paying attention to. One of them that I'm referring to is what central banks have been doing in terms of accumulation of gold. When you look at the price of gold itself, it's hard to justify this move we had over the last year and a half by just calculating it by looking at Western investors and others that have been reported as buyers pushing up the price, because that is not in line with the type of movement we tend to see in terms of volume. And so there has been a lot of buying that is, as you mentioned, outside of the what's been calculated when it comes to indices and other exchanges that tend to track those things. And that's quite concerning. And I would say, I'm paying close attention to what the U.S. is about to do, because I do know Trump is a big fan of gold and he's playing this Bitcoin game. But one thing I learned in my life is that when you do want to buy a significant amount of a certain commodity or a certain asset, what you don't do is announce to the whole world that you're going to do it, right? You buy it and then you tell the world, this is what I've just done. And I find it interesting, the fact that people are looking at this whole story about, and again, it's nothing against Bitcoin. I just think it's missing the big picture here of what gold really is, what gold really means to this whole setting of, really historical levels of leverage that almost forces economies to accumulate the metal to enhance the quality of their international reserves. And I do think that the U.S. is getting close to some radical changes in its policies in order to do that. Their openness to talk about Bitcoin. Imagine what is happening closed doors when it comes to gold. Scott Batson, the Treasury Secretary, if people don't know, and again, a lot of people don't like to talk about him just because he worked for Soros, but pay attention to what he's doing. His largest position right before taking this job was gold. Wasn't Bitcoin, wasn't oil, wasn't silver, was gold. That doesn't mean other commodities and other things shouldn't do well. All I'm saying is clearly there's a understanding of the history and the credibility and also the reputation of the metal, of being able to act not only as a safe haven, but truly as an anchor to a falling monetary system like the US dollar and other fiat currencies. And so this race of accumulating metals and other commodities even is just at the beginning in my view. And I think we're going to see prices of metals that are likely to surprise everyone, not even myself. No, I'm as bullish as you could be, and I think I would be surprised at the end of this era.
Analysts, including Tavi Costa, anticipate a shift in global reserve currency status, suggesting the U.S. may need a weaker dollar to sustain its position. He notes parallels to the 1985 Plaza Accord and expects a coordinated or organic dollar decline ahead. According to financial analysts, it's unlikely the US dollar will collapse. However, JP Morgan Research reports a 45% chance the US will be in a recession by the end of 2025, so it's still important to understand what would lead to collapse and how to prepare for it. The US dollar has risen sharply against a basket of other currencies in recent months, as tracked by the dollar index, but remains below the 2022 high, well below the 2001 high, and hugely below the 1985 high. So we see these huge peaks and valleys, but now the dollar is about where it had been in 1977. Its share has been zigzagging lower for many years as central banks have diversified their holdings to assets denominated in currencies other than the dollar. According to Costa, weaker fiscal spending and suppressed interest rates will accelerate this trend, putting the US dollar in a precarious position. Let's get back to the interview.
And by no means, I think we're at the moment where we're going to see a shift to another currency to become the reserve currency status. But I do think that in order to maintain that status, the U.S. almost requires the U.S. economy to weaken its currency. After listening to Trump closely and listening to his views about currencies over the years, it is also evident to me that he's very much of a guy who likes to pursue a weaker currency path, despite the fact that he wants to have the global reserve currency status, of which Scott Batson, his Treasury Secretary, has stated that those two things are not mutually exclusive. In other words, that they can happen in tandem, of which I agree with. And so I'm paying close attention to this because the world is being suffocated by what you just mentioned, which is the rise of the US dollar. If the US economy wants to continue to grow, we have to rebalance things. We have to take dollars to other places outside of the US. And that ultimately is what drives growth outside of the US as well. That drives the global economy, and everybody's happy. But, we saw this as a coordinated act back in 1985 through the Plaza Accord. Is this the Mar-a-Lago Accord that we're on the verge to see? Potentially. I think either organically or coordinated, the dollar appears to be nearing a significant turning point. And a turning point that we tend to see every 10 to 15 years. When you take the DXY index, which nothing else is nothing more than taking the dollar relative to the euro, relative to the British pound, relative to the Japanese yen, and others. When you take that basket index, what you find is that over a course of 10 years of performance, you tend to see very long-term cycles for the dollar. And clearly, looking at that chart, the DXY 10-year performance has been rolling over recently, despite this surge that we've had over the last a few months. And I am of the view that we're going to see two things. And those two things are almost the perfect combination to the strength of the dollar. Those two things are weaker fiscal spending and also very likely to see suppression of interest rates. Notice that those two things work together. In order to reduce fiscal spending, you need to suppress interest rates. That's the easiest route to reduce fiscal spending, assuming that 4 to 5% of GDP is being used just to service the debt. So by reducing rates, you accomplish both things. And Druckenmiller said it many times in interviews in the past, particularly in the 1990s. And one of the things that he said is, the combination of strong tightening monetary policy along with aggressive fiscal spending is perfect for the US dollar, especially when it's done on a relative basis as well, relative to the European economies or relative to Japan or Canada or Australia. And I think we're about to see the opposite of that. We're about to see, very significant monetary loosening despite the fact that inflation remains elevated. And on top of it, I think has been a clear pressure from different, not only the households and the population, but also the new administration to reduce fiscal spending as well. And I think the combination of those two things is quite destructive for the US dollar relative to other currencies. So I guess that sums it up why, I think the dollar is at a very dangerous zone right now.
A drive to invest in gold sent the commodity's price to a record high of $2,788 in 2024, and some experts predict that it could soon break the $3,000 barrier. If gold continues to rise while the US dollar weakens, how should investors strategically position themselves to benefit from this shift? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.